With assets totaling over $3 trillion, Bank of America is the second largest bank in the U.S. today. Shares of the company have seen astonishing gains of over 290% in the last decade.
Bank of America is truly massive. They've got something like $2 trillion in deposits and another $1 trillion in loans. They have one of the world's largest wealth management firms, and they're a commercial bank of pretty good scale. And all of that's under one roof, under the Bank of America roof.
But Bank of America's rise to success has been anything but smooth sailing. The 2008 financial crisis pushed the bank to the brink of collapse. It was a loss so catastrophic that it required a $45 billion bailout from the U.S. Treasury.
Bank of America was one reason why much of the investing public and consumers and government lost faith and trust in banking. If the government did not intervene for Bank of America and the other banks, Bank of America would have failed.
Fast forward to today, Bank of America is thriving despite concerns over inflation and threats of a possible recession. The bank reported a net income of $31.9 billion in 2021, compared to just $4 billion in 2008.
As the rates have gone up, and if the recession is shallow, then we're going to see widening spreads and the ability of Bank of America to have a significant earnings from net interest income. This is unique to the banking industry, and Bank of America, being one of the largest banks, stands to benefit the most.
So how was Bank of America able to stage such an impressive comeback? And where is it headed next?
The big change at Bank of America is that they have gone from irresponsible growth to responsible growth.
A more conservative lending standard is just one example of the bank's aim for sustainable growth.
One key aspect of Bank of America's responsible growth is to say no, and to say no more often, and say no to subprime lending, and say no to transactions that have too much debt, say no to clients that might be causing a lot of risk, so that when they say yes, it results in a lot more growth that's sustainable, responsible, and better for their reputation.
Another example is the bank's meaningful investment in its future.
B of A has perhaps, better than most, has done a good job of digitizing their businesses. They're spending money in technology. They're using those savings to buy back stock and to improve their financial performance. And that's been the story, certainly of the last 5 or so years of B of A.
These changes have allowed Bank of America to earn its position as the second largest bank in the United States. The bank's most recent earnings for the third quarter topped expectations, with $24.61 billion in adjusted revenue.
Coming into this year was one of the favorites, if not the favorite among bank analysts, because of that coast-to-coast branch network, of that cheap deposit funding. They were seen as one of the big beneficiaries of, the Fed is raising interest rates. It's going to allow the industry to make more money, in terms of just that net interest income that we talk about.
And despite the threat of a looming recession, Bank of America's rise might just be beginning.
This is a decade in the making in terms of preparation for a recession. So Bank of America has de-risked their loans. They've de-risked their trading. They've de-risked their risk appetite. They've been preparing their technology for more business volumes, and they've been preparing the strength of their customer relationship for the time when rates rise. And I estimate that so long as loan losses don't more than triple, Bank of America's earnings will grow through a recession. And if that happens, on the other side of that, not only should Bank of America stock go back to their historical valuation, but they have a chance to re-rate above the historical ranges where they previously traded.